Thank you for staying with us. The finance industry is evolving rapidly, driven by the growing demands for speed, transparency, and convenience. As technology becomes increasingly integral in daily life, consumers expect the same level of innovation in financial services, including the corporate world. To meet these expectations, banks are seeking innovative solutions to enhance customer experience. Joining us in the studio is Segun Fumi Oyedele, a software engineer and founder, Raise, who is passionate about creating impactful solutions for Africans worldwide. Interesting. Good morning. It's good to have you join us this morning. Before we get into what you do, let's look at how far we've come as a country when we're talking about financial inclusion, which is about accessibility to banking services and affordability and all of it. How far have we come from your perspective?
I think we've come a long way. And we've even done that in a better way post-COVID. COVID showed us a lot of opportunity for growth. And I think the digital banking sector of Nigeria rose to the action. Before COVID, there were about 155,000 POS terminals. After COVID, 155,000 POS terminals. After COVID, we have over 1.1 million POS terminals. In terms of remittances, transactions, in Nigeria alone, there was, I think, over $839 billion in cashless transaction in 2023 alone. So I think we've come a long way. There is greater level of financial inclusion within the banking space, digital banking, fintechs, and big shout out to the government for also supporting this, because most of the fintechs were building based on the infrastructure and the compliance permission given to us by the government. So I think we've really come a long way to your question.
Right. Interesting.
So you mentioned POS terminal.
Yeah.
I'd just like us to quickly thrash that, because some people believe that, okay, fine, we have a lot of POS terminals, people having access to cash easily, instead of having to go to the ATMs.
Right.
But others are of the opinion that it's not really helping our currency, because just like some people are selling Naira to get Naira because of the gains that is recorded from it. Because it's supposed to be point of sale. I want to buy something, then I pay using the POS terminal. How do you see it? Do you feel it's a good thing that happens in Nigeria, or is something that is also affecting our currency?
I think it's a good thing. I don't think it's really affecting our currency. The reason why I say that is people need cash to be able to carry out transactions. If you're looking at, and POS and the likes of other terminals, they really function based on what is provided by the government. So it's not a POS terminal problem. It's more of a policy problem. Look at 2023 when we had the change of currency. There was no way to carry out transactions. People had to rely on POS terminals. It's not as though the banks were giving out cash in excess, right? So it's what they get that they give. That's the issue. But the goal here is even to move towards a cashless transaction state. So the POS are coming in hand in that way, helping us to even remediate the fact that there's not enough cash to go around for all the things that we're doing. Nigerians are affluent shoppers. There are a lot of businesses. We need cash to move as quick as possible. When you start looking at conversion rate, moving currencies to a different country, doing international transactions and all of those things, there are a lot of suppliers. What's the hope of a petty trader that doesn't have access to cash, right? So, and not every petty trader can go into the bank and all of those things. The time and all of those things.
Those are the critical issues that we need to even look at when we're talking about financial inclusion. When you tell an average petty trader, like you mentioned, that, okay, the government has been talking about this cashless policy for quite a while now, but it seems like we move forward and then we go backward. A lot of people still are not understanding what this cashless policy is about, which speaks to the matter of education, how educated Nigerians are with the essence to have a cashless policy and to also buy into the idea that government is speaking to. How far have we come with that, educating Nigerians, and as well as the petty traders, this other economies that really help build our economy as we speak to the informal economy that help build the economy at the end of the day?
I don't think we've done enough education, to be honest. As with anything new, there are going to be early adopters. There are going to be people that are going to resist the change. People are more comfortable with what they're familiar with.
Absolutely.
So you're telling a petty trader to move to digital bank. Once she doesn't even have a phone, she's not connected to the internet, there's not enough infrastructure to support the cashless policies that we're talking about. So do we have enough support to sort of move into what we're trying to move into? Because if there's no infrastructure, if the policies that supports this are not put in place, it's going to end up in a total failure.
Right.
We've seen things like that play out with subsidy, change of currencies, new notes, and all of those things. If policies that support these things are not put in place, then the action itself might be good, the intentions might be good, but the results will not be good.
We do not have the policies? Is that what you're saying?
So when I say the policies and the infrastructure, if you have a petty trader, what is our hope in terms of moving to a cashless policy? Does she have a POS terminal? Is she educated on how to use the USSD codes? How often can she go to the banks and all of those things? How is she connected to the financial world, right? So we need to properly make sure that there is enough infrastructure to support what we're trying to do. Then we need to educate people that are resistant to it. They have serious concerns.
Absolutely.
There's security. If I have my cash at hand, I have control over it. So I know my money is safe. So how do we educate people that you having your cash at hand doesn't necessarily guarantee that it's safe? It's not fighting against inflation and all of those things. So those are areas that we need to look into. And also from the government side, I think the government is doing a good job. I was reading recently the NIBS system. They introduced the Open API system, which is basically bringing all the banks together for interconnection and all of those things. So we're gradually getting there, but these things don't happen overnight. Right?
I do not know. I would like you to speak to how fintechs are actually revolutionizing our banking sector, especially with the fact that the SMEs and then the petty traders are actually keying into it because of the drive that the fintechs are actually moving towards, selling their products to them.
Right.
But I do not know how some companies are actually relating with them, because I had an issue with one of the e-commerce platforms that we have in Nigeria, and I requested for refund. They said, okay, we're going to refund your money, but they listed some of the names of the fintechs. They said, okay, I should give them a name of an account of a conventional bank, but not the fintech. So they listed the names. So how do you feel fintech has been, performing in Nigerian, transactional policies and milieu that we have?
I think fintechs are doing great in Nigeria. There's a lot of room for us to even do better, but we're doing great. Nigeria controls about 80%. Well, let me say 5 out of the 80% fintech companies are in Nigeria, and that's a good number in terms of those that are doing it globally. So Nigeria, Egypt, Morocco, Angola, Kenya, I think about 2 other are really controlling the space in the fintech space. Nigeria right now is the leading payment company, digital payment company in Africa, number 6 in the world. So we're doing great. In 2023 alone, like I mentioned, there was over $500 billion in cashless transactions, real-time transactions, right? But the thing is, fintechs, I think we need to educate ourselves as to what fintechs really are. Fintechs are not necessarily banks. For example, Race is not a bank, we're a service. So we're built on top of traditional banks, right? What we're bringing is efficiency, speed, convenience, lower transaction fees, and all of those things, right? So in a case where you're asking for a refund and they listed other banks, not the fintechs, it's probably because the fintech you're interacting with is not necessarily a bank. They're a service.
Even though the transaction was made, I paid for that transaction or for that product using the fintech, but they didn't want to return my money using the fintech.
Yes, so I'm guessing what you had was sort of like a custodial account, right? And to break it down, what it means is the fintech is representing in front of a bank. The fintech has partnerships with a bank, and they're representing that this is our customer. So open an account for this customer. All the money still sits with the bank, but they are your representatives, right? So if the money is going to go back through the NIBS system, which is the Nigerian interbanking system, it has to go through a bank that is recognized by NIBS, which is the traditional banks. And I'm guessing that is why your refund could not be directly into your fintech account, but it will most likely go to the traditional banks. Then there's going to be a ledger balancing, and the balance will reflect in your system.
Right. So let's look at how the fintech is trying to bridge the gap that we have witnessed over the years when we're talking about financial inclusion. There are still a number of persons that are unbanked as we speak, and there are those who do not want to have anything to do with banks, because you mentioned some things, fees,
right?
The number of deductions you get from banks. Sometimes you want to walk into the bank and tell them, what is wrong with you? Is it a crime that I'm saving with you?
Right.
And all of it. And then the matter of trust, where I can just walk into the bank, get my money and walk away. But then sometimes you hear all sorts of stories. You cannot withdraw more than 20,000. You cannot get more than this and that. I mean, it's my money. Why can't? So how is the fintech trying to make that easy for Nigerians?
So the fintechs, they're making it easy in a few ways. The primary one is leveraging technology, right, to bring convenience. If you have to open a traditional bank account, you have to go with documents, you have to go with papers, you have to go into a bank. With the fintech, you don't have to do that. So you're cutting costs and you're saving yourself time, you're cutting costs, just open an account, right? So the fintechs are helping you out with that. There's a stronger KYC, there's records that proves that with fintechs, there's been a lower rate of fraudulent activities.
Really?
Yeah,
really.
And it goes against traditional belief, but it's actually better with fintechs just because of the stronger KYC system. So access to cash. With the fintechs, you can even transact without needing cash, right? You can transact globally. With the traditional banks, you're at the mercy of your bank.
That's right.
If there's no cash in bank, there's no money to you. Not because they don't want to disburse, but they can only disburse what they have, right? With the fintechs, you don't necessarily have to do that, right? And you can easily move money from one system to another. The fintechs usually sit on top of all the banks, so there's a level of shared liquidity where the fintech is never running out of money. So you can try to withdraw from Raise, and you get to a point that Raise doesn't have enough money to disburse or to give you your money. It's never going to happen. So things like that are the reasons why fintechs are a little bit...
So there's a level of trust between you and the customers.
Yeah, so fintechs are more neobanks. We're customer-centric. For Raise, all the products we've built are really for customers. So we're not building... Banks, if you look at the traditional banks, the system at which, how they started, right? Most of these banks, where they generate most of their revenues are not from consumers like you and I, right? So they have bigger fish to fry or bigger revenue streams. So there's less focus on what do we do to improve security for regular customers? What do we do to make life easier financially for customers? Because one, they need to also get updated with their systems. I've interacted with a lot of banks, and you'll be surprised at how archaic some of the systems are, right? And you will say, this is a name brand, this is a name bank, controlling trillions of transactions, and this is what you guys have, right? But the fintechs is different from that. So there's a closer relationship between fintechs and the customers, because we essentially are also customers like you. So we go through what you're going through. We built Raise out of feeling the pains that you're feeling. So we know what works for you. We understand exactly where you're coming from. So we're able to build solutions that cater to your needs.
So, sorry, Ibrahim. I'm interested in focusing on the bigger fish just against, you don't make money from customers. I need you to expatiate.
So look at banks controlling assets and dealing with major companies and things like that. How much do you think a bank generates from the money you have in your bank accounts? Really? Right? They are controlling assets for organizations, for governments, and they are investing in profit-yielding assets and things like that. So in e-commerce generally, or in the financial space, people that purchase cheaper products tend to have more complaints compared to people that purchase high-end products. Because if I'm going to spend 10 million naira on a product, I must have thought through about it very well, compared to if you're selling me a charger for 200 naira. It's more reflex, right? So if I have any complaints, I'm going to come and reach out to you. So banks are dealing with the high-ticket customers, although they have provisions for low-end customers like you and I. So, but the attention that is being placed, if you have a business account or if you're an high-ticket customer, sometimes in some banks, you have a dedicated account officer dedicated to your account. So everything that happens to your account, you can call someone at any time. You have a customer success relation manager. You have all of that. But none of that is made available to traditional customers like you and I. So that is why I'm saying that they have other areas to focus and they're not willing to spend a lot of money trying to change their system to what works for you. The big corporations, they don't do as many transactions as you and I carry out.
Absolutely.
Right? You can carry out 10 transactions in a day, and at the end of the day, the 10 transactions might just be 1 million naira in a very good scenario. Right? A major customer of a bank carries out one transaction of 200 billion.
I mean, it's okay. It's
well,
fine.
in a country where the SMEs, the small, medium scale enterprises actually, constitute about 80% of the Nigerian economy.
Yeah.
Do you not feel that a lot of them buying into fintechs, especially fintech, you putting your money in fintech and then you're getting, reward, you get dividends almost every day, some interest, as against what you see in commercial banks, conventional banks, where even your monies are deducted. I have of the opinion that banks are designed to steal your money. That's my own opinion. So do you not feel that we might get to a stage, especially with what we see in developed economies, where what you have to do is just your phone, maybe your card, and then you tap, and then you pay, and everything is done. You don't have to start, exchanging notes and all of that. Do you not feel that fintech might supplant the conventional banks eventually?
I probably wouldn't say supplant the conventional banks. For you to succeed in the fintech games, you can only succeed or survive through partnerships with the conventional banks. Right.
Oh, so they have to depend on conventional banks
to an extent, right. They control the asset. They have the, let me give you an example. They have the structure. They have the compliance and regulation figured out to a good extent. For fintechs, there are new regulations, which is one of the challenges for fintechs in Africa at large. Changing regulations, there are no clear policies as to how things are done. The conventional banks, they have enough money to have dedicated officers, lawyers, taking care of those things. They have right partnerships with the CBN because, again, they're high-ticket customers and they're high-ticket clients to the CBN as well. But as far as supplanting the traditional banks, conventional banks completely, I don't think we're going to get to that point.
In Nigeria?
In Nigeria or even globally.
Really?
I think it's just going to shrink. And what you're going to see is the conventional banks are going to start getting more open to partnerships, right? Every bank would be open to partnership if you're bringing in money for them, you're bringing in revenue for them. And the fintechs are the ones that people are looking towards. So why don't you partner with the fintechs? It's either they buy you up to try to shut you down or they partner with you. If you're on the good side, if you're lucky, you get on the partnership side. And that is why I wouldn't advise. Raise is not by any means trying to compete with any of the conventional banks. We've gotten to where we are today through partnerships, right? We're partnering with some of the banks that are known, and they are really our backers. So I don't think we're going to get to a point where we're going to kick them into extinction.
But let's look at those in the rural areas, how we're looking to bring them into the system, because most of them do not have, access to banks and all of these activities. You mentioned earlier the matter of some persons in the rural areas do not have phones, the kinds of phones that we use. And so what is Raise, for instance, doing for such kinds of people? So
some of our products are things that cater to people like that. For example, we have the Agile products, which is really a thrift saving system where people come together and things like that.
Raise is a southwestern, dominated.
It's a southwestern. Well, we don't refer ourselves as a southwestern dominated.
But
because of the word Agile.
Dominated in the southwest.
Yeah, it's dominated in the southwest. We're really a digital bank for Africa. We're not even for.
So where do you have another branch, or where you service everybody?
We service everybody. And we're servicing everybody across Africa very soon. Some of the things you can do with Raise is with your NIN, with your address document, within few seconds you can create a US bank account without ever having to leave Nigeria. These are things that are not possible for SMEs, like you said. We've had SMEs reach out to us where they're trying to expand their market. There's a lot of interest in Africa coming in from different sectors, the entertainment, the fashion, and all of those things, right? But we don't have enough financial infrastructure to support that growth. We have businesses that have customers in diaspora that are trying to pay them in different currencies, but they're not able to accept payment. We have, post-COVID, we've had tons of around 1.7 million people in Nigeria are online gig workers, right? Working for employers abroad and things like that. And receiving payment has always been an issue. So those are some of the things Raise is solving. But going back to
question of...
Going back to your question, as far as what are we doing for the local, so we're starting from a place of education and providing resources. So we're educating people, we're having people that are going to go to those local regions, educate them, provide resources, establish branches there. In Africa, for every branch in Africa, or for every 100,000 customers, there's only 5 branches of banks to service 100,000 inhabitants. In Asia, there's over 13 to 15 branches to service the same number of inhabitants. Just because there are more branches, the number of transactions that are able to happen in the Asian space is 42% higher than that in Africa, just because there are more banks, there are more people can relate to.
Right.
So those are some of the things that Raise is going to do. We're not going to be a digital bank where we don't have a branch, we don't have a physical locations. We're going to go into the cities, we're going to go into the rural areas, and we're going to cater to these people.
So another issue is the cybersecurity, which is very much of a significant concern in Nigeria. With over 50% of banks experiencing, cyber attacks, and in 2020, according to KPMG.
Right.
How do you think we're trying to revolutionize the digital system in the banking sector, where we'll ensure that customers' data is secured and that of the cyberspace, where banks operate, are also secure? Because even the US also witnessed cyber attacks and all of that. One of it, well, maybe not one of it directly, but a Nigerian man who was said to have been arrested for $10 million pandemic unemployment scam in the US. We know the hush puppy of this world. We know the how did they say Puff Daddy?
Don't go there.
But where
So I think the major thing is we need to move from a reactive standpoint to a proactive standpoint, right? A lot of banks, things happen and they react, right? But how about you take proactive measures? And again, some of these banks are not willing to invest in proactive measures to ensure that things like this are not happening, right? For example, we Raise, if you're logging in, a typical example, if I'm logged into my bank account, my Raise bank account right here, and I travel to Port Harcourt, and I'm trying to log in again, it's going to ask me for authentication just because it knows the last location where I logged in and the current location, the distance is too far, right? So that's a proactive step. For Raise, all of our we have a very robust KYC system, right? You just don't open an account and you just get up and running like that. We have a robust KYC system. We're plugging into the FBI and CIA wanted list. We're checking for AML checks. So we have, PEPs, political exposed individuals. We're checking for sanctions. We're checking for crimes. We're even checking for advised media records. So if you've had any negative media record at any point, so we're combing through different data sources. And if your name appears in any negative media records, you're not going to be able to open an account.
Really?
So we're taking a very proactive measure to enforce security because we want people to be able to trust us. We want to be a bank that people can trust for banking with. So those are some of the things that we're doing. And I think the banking sector generally just needs to move from being reactive to being proactive and not waiting for things to happen and now implementing measures to change things. Yes, crazy news about some of the ways these scammers, and these scammers are brilliant, right? These are individuals that are working, they work as hard as you and I work to earn a living, right? So they do a lot of brainstorming, they do a lot of research. Why are the banks not putting the same effort into researching this and into, putting the right measures of security in place. To avoid these things, right?
Interesting. So earlier on, you spoke about policies by government. Traditional banks have understood these policies and are working closely with the CBN. But when it comes to fintech companies, they are still struggling and trying to get their footing, and that some of these policies are not really necessarily in their interest. We've had some persons talk about that. So what would you want government to do that would integrate fintech companies in such a way that everyone is thriving, and then we can expand this net of inclusion that we're talking about?
I think that the government as a whole just needs to be open to fintech, right? I think there's
not open yet?
I think there is not enough welcoming for fintechs.
Really?
And I'm not sure where to direct that to, either the government or the conventional banks, right? Some banks are seeing fintechs as a threat. Why, some are also seeing it as a means for people to scam other people, to move money.
So trust is a major issue.
Trust is a major issue.
But I think fintechs are actually insured by the NDIC. So
they are
to that level, why should any bank be afraid?
So if you look at for example, talking about policies, there are licenses that used to cost about 500,000 to acquire before COVID. Now, some of these licenses, they've gone up to 25 million naira.
Wow.
So what's the hope?
Is that due to the recapitalization?
Recapitalization, yeah. So you have to do recapitalization. For some of the licenses, you need to have at least your share capital has to be $1 million.
Interesting.
So $1 million is what? 1.5, about 1.5 billion. Right? For some, it's 2 billion. You have to have 2 billion share capital. So what is the hope for fintechs, right? But through it all, we've been able to weather the storm through partnerships and through support of people. So
government needs to look in that direction.
Look into that direction, welcome fintechs. And I think once the government sees the importance of fintechs to the growth of the GDP, to the growth of the economy, I think they can start working.
I believe government is seeing that because this administration had mentioned talks about ensuring that we get 1 million jobs for young people in the tech industry.
Right. And
it goes to show that the government is perhaps looking in that direction. Perhaps someone needs to push the conversation in such a way that government really, or engage government in such a way that government sees what you are feeling so that it knows what step to take.
Yeah, but there's difference between looking in the direction and actually working towards the direction. So I think so the government is looking in that direction.
Or it needs to understand what you're feeling to know how to work in that direction.
I'm pretty sure the government understands the issues fintechs are facing. They are not novel issues. They are not things that are unique to fintechs. These are issues that cut across several other sectors of the economy. Right. So
but if you need to push an argument for yourself, because it's your sector, and you know that this is where the shoe pinch. So you have to push that argument, not assuming that government sees and knows.
We're pushing that argument, and the way we're pushing the argument is to let the government see the benefits that we're bringing in. Right. And if fintechs, for example, there's been millions and billions of dollars in remittance from diaspora back to Nigeria, right? But there's not been a lot of exports. So export of money to other countries or to other parts of the world. And that is one of the reasons why we have Raise. So with Raise, you can move, you can transfer, let's say I'm a customer or I'm a merchant, I have a supply in China and I need to pay in US dollars or Chinese yen. I lose probably 5 to 10% of my money just trying to convert my currency. And before I'm able to pay that supplier, it takes 7 to 14 business days before they're able to confirm and before they send me the goods and all of those things. But with Raise, you can do all of that in a matter of hours, right? Creating the account, converting the currency, sending it over to Asia, you can do that in a matter of minutes, in a matter of hours. So all of that will bring benefits to the economy.
Well, unfortunately, our time is up. We have to wrap up this conversation here now. Well, we must thank you, Segun Fumi Uyedele, software engineer and founder of Raise, for your time on the program.
Thank you.
And well done on what you do.
Thank you so much.